Good morning.
Week number 1.
What happened to the music? Where'd my music go? What did you do? It's playing. Wow. Weird transition. Morning, Maida. Cool. I guess we should go, but then I gotta find the music. There it is. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose because, well, you don't want to lose. Pretty simple, right? What does the NFA want to hear? That trading might not be appropriate for you. Past performance does not predict future results. Trading is risky. All right, so what do you want to know? What do you want to do? We got a lot going on this week. There's a lot of news, and it is a shortened week. Markets are closed on Friday, so there's no live streams, and there's no training, and there's no whatever. If we normally do it on Friday, we ain't going to do it. So anyway, that is because, it's Good Friday and the markets are closed. If you would, let me know how it can help. How can I help? What do you want to cover? I popped a poll here, and it's asking, what do you want to do today? Do you want to look at Euro, Aussie, gold, stock market like S&P 500? Let me know what's on your mind, and we can focus this so that you get maximum benefit. You can tailor make and customize your experience here at Forex.Today. Cool. Also, you can say, hey, can you help with this? Can you help with that? For sure. Let me go to the live screen. Some of the things that we could do today is we could look at fundamentals through Quant box evaluation. We could do some, and like, for example, we can use the calendar, and we can do that. And we can use TRADARS, which you may have come across now. I'm slowly telling people about it. And there's a tool on TRADARS which I've renamed sonars. There's radars and sonars. And this tool is, well, let's just say it's phenomenal. And it'll probably give you an edge in the market. But if you use a traditional foreign exchange broker, you might get yourself into trouble. Not like hot water, like there's no insider trading. But many brokers have a business model based on B booking. And if you use a tool like this, radars, the sonars, it's very powerful. So this looks at like GDP coming out later this week. And it's analyzing all the situations in which U.S. GDP came out as expected, less than expected, or more than expected. And it goes through history. That's why it's sonar. It goes back in the past. It looks down. It doesn't look up. A radar looks up and sees things that are coming toward you, new things coming toward you. That's what the radars are. Sonars look beneath the surface. And through, in this case, we're looking through history here. And you can say, well, if it comes out as expected, what typically happens? Okay. Or you can say, well, if GDP comes out less than expected, what typically happens? And so in this case, TRADARS goes through using its sonar, and it can show you what's happened in the past. And then it does calculations, and it says, well, 75% chance if that's true, the 4-hour will be up. And that's on the Kiwi dollar. And you're like, well, I don't want to trade Kiwi dollar in that situation. I might trade like Euro dollar. Well, we have the stats for that. If the actual comes out as expected, there's a 100% chance the 2-hour trend will be up. You're like, wait, whoa. The other one said 4-hour. Well, this is 2 hours. And so what it's doing is it's analyzing euro dollar going back years and years and years, calculating all the charts before and after the news, looking for discernible patterns, and then analyzing those patterns on multiple time frames so that when the news comes out, if it comes out actual, it goes like this, boom. And it shows you in the past, the 28th of September, it went up. Okay? In 23. But in 22, it went up as well. And in 21, it went up. So on and so forth. In those situations, it always went up. Now, this is the thing. I'm not saying it's going to improve your trading. I need to tell you that past performance does not predict future results. But this is really good information because we know factually this is what actually happened. Once again, it doesn't tell you what's going to happen, but you now know what happened and on what day, and you can see the change that the news created and on that time frame. But you can go back and get multiple time frames and, all that kind of stuff. So you're like, well, okay, so there's a scalp, but what about a day trade? Okay, so remember, if it was equal, 67% chance it's a day trade. See? And it looks like it's on those same days. Cool. But is it a swing trade based on past performance? No, it was not. Okay, like remarkable detail in history. And imagine that we have all these charts and we go back through history and it organizes and thinks about it, it looks for patterns. And so you have the statistics, you have deep dive stuff. But if you're using a broker that's not an ECN, and if you happen to improve your trading, they could kick you off their platform because you would no longer be profitable for them. Because remember, if you're B-booked, that means your broker wants you to fail. So think, again, the example is a typical broker will have, let's say, tens of thousands of customers, but they know 95 to 98% of them are just going to lose all their money, right? So what they do is they match trader A with trader B and offset those trades. Right? And then trader C with trader A and offset those trades. And they know eventually 98% of the time those traders are going to lose money. So that they never enter the trades into the interbanking system. They just keep all the deposits because eventually you blow it up. So what if suddenly you're trader D now and you show up and you actually make wise, intelligent decisions and you're actually profitable? Well, you're kind of ruining the business model. So long story short, if you're going to use that type of research, you should consider Trader's Way, which is an ECN, and they benefit from your success. They're cheering for you. There's a symbiotic relationship because they don't be booked. So, just heads up. That's how the world works, whether you like it or not. So be careful. So anyways, going back to sonars. So, sonars are great because when when you look at a calendar like this, let me pull up a traditional calendar. Okay, cool. This is a traditional calendar. And look at all the stuff on the calendar today, tomorrow, right? Wednesday, Thursday, right? And then Friday should be nearly empty, although the American government has decided to put core PCE on Friday when the markets are closed. Okay? Yeah, Grumpy Cap. Yeah, a bucket shop is another one, right? So that's the traditional model. So just beware, okay? Like, beware. Some of these tools that traders have are kind of banned by most brokers. I certainly looked frowned upon. There's hundreds of things on a calendar, right? What Sonars does is it looks at that calendar for you, and it says there's only 3 things on that calendar that matter this week. It's not that the other stuff don't matter, but when you analyze those news events relative to the dollar pairs, and then look at the movement on multiple time frames, if there's no discernible pattern in the volatility created by the news event, then it's unpredictable and therefore probably not worth your time. So they exist, but tomorrow at 7:30 a.m., well, it's actually 8:30. The time is off because of the time change. And GDP on Thursday. And that's it. Okay. Now you have French and Italian inflation on Friday, but you're probably enjoying time with your family. But isn't that good to know that there's really just 2 things on the calendar? Okay. And look, you see this? You can pop it on your calendar. It's cool, right? Okay, Jeffrey asks a really good question. Okay, how do you use Quant Box with TRADARS? So Quant Box uses AI to do fundamental analysis. It does some statistical analysis that looks like technical analysis, but really it's just statistical analysis. It calculates the slope of the mean and standard deviation and then does some linear projection. That's just stats, okay? But for example, in a very simple way, you could like organize your thought process like this and say, based on the fundamental score, you might be interested in buying oil or buying, let me expand this out, okay? Or buying euro pound. Maybe you're interested in buying gold, okay? And then on the flip side, when you organize by score, maybe you want to sell pound yen. Maybe you want to sell pound CAD. Maybe you want to sell pound Aussie. Maybe you want to sell pound dollar. Maybe you want to sell pound Swissy. Maybe you want to sell pound Kiwi. Oh my God, maybe you just want to sell the pound. Okay, Jeffrey? So you've made a fundamental decision based on commitment to traders report, retail sentiment, seasonality, trend, GDP, inflation, so on and so forth. You feel like fundamentally you want to be short pound. We call that a bias. Okay, great. But that's only fundamentals. Now, QuantBox does things that are also shorter term, like market sentiment. We're doing that on multiple time frames for multiple asset classes and then correlating them. Scatter plot tells you exactly what's happening right now. So we do the short-term stuff, but when you finally get to those scores, QuantBox is, well, quantitative analysis of macroeconomic data. From that, you say, well, maybe I should be a bear on pound. So when you get to radars, okay, radars, right? Remember what radars do. They look into the future and they see things coming. So you might say, well, you're interested in selling pound. And then you see a pound Swissy up trade that formed less than an hour ago. Are you interested in that? No. Why? You're fundamentally a bear. So you wait for radars to, right? Your Forex radar to pull up bearish scenarios for pound. Well, that's not one. Okay? And you go through and, well, here's one. 8 hours ago, an ABCD, okay, pattern was forming on a 4-hour chart. See, the other one was smaller time frame, I think, right? Yeah, 30-minute chart. So that's a short-term up followed by potentially a longer-term down. And that's what's forming here. And you're like, ooh, I might want to look at this one. Okay? Pound yen down. You're like, ooh, I might be interested in that one. Okay? On the 4-hour and the daily. Okay. Interesting. So you're like, okay, you'll put that on your map and you pull that up on your chart. Okay. Ooh, pound dollar down. An ABC Fibonacci pattern identified 320, which was last week. So you already know this is in play. This pattern is still in the process of forming. Possible bearish price movement toward the target levels ranging from 128 down to 124, 125. And you're like, oh. Okay, so you see how you're pulling that out? Now, I was thinking about this too. There might be a quickie way of doing this. Okay, so you go to your Forex pairs and you turn off everything that's not a pound. I was thinking about this earlier this morning. And you're like, okay, I'm interested in selling pound dollar. I'm interested in selling pound yen. I'm interested in selling pound Swissy. Get rid of euro dollar, euro yen. Euro pound, that might be a long, so you'll leave that. Euro Swissy, get rid of that. Euro CAD. Yeah. And I think if you do that, now there's only pound pairs. And here are all the trades that are in process of forming. These are all emerging patterns, but they're all pound now. And you're like, well, I don't want to buy this one, but I might be into selling a lower high here, selling a lower high here, selling, and so on and so forth. And now you're combining what you think fundamentally should be with what technically is happening. And with that, maybe, just maybe, your probabilities of success increase. Maybe. I don't know, but maybe. Okay. And then you can go back and then turn on all your Forex pairs and bring them all back. Okay. And right now, there's no pound pairs in play. They're all forming. So you got to be on those pound pairs doing your analysis now, pulling up your charts now. And if you see opportunities, you need to take them now because they're forming. They haven't formed. They're not in play, but they might be in play, which means you need to be doing your job. By the time it gets over here, your stop's already at break even and it's moving targets. Okay. So anyways, that's how you get her done. And once again, I would consider an ECN like Trader's Way. There are a few like it, but this one is mine. So anyways, that's how you use your tools, huh? Was that helpful, Jeffrey? Let's take a look and see. Thank you for contributing to the poll. I appreciate that. Awesome. Yeah, it's pretty powerful, Jeffrey. Like, just because there's a technical pattern doesn't mean it's worth trading. It just is a technical pattern. If you use your bias to confirm opportunities, I think your chances of success are increased. Okay, so here we are. You guys are interested in Euro most. All right. Interesting. I suppose it's because you're Forex traders. And we have this here. So this is what I was looking at last night. See, the day trading group meets Sunday evenings, pre-Asia Open, so that we can plan the future in advance. And so anyways, we got that kind of forming. Okay. Oh, I forgot to do the market updates. I thought this was actually pretty cool. I got a couple of emails today. Quant box market open at 6 a.m. and then TRADARS market overview report at 7, right? An hour later. So you get two different reports and then some other stuff. So if you are a subscriber to QuantBox, you get an overview like this. And this looks like the London Open. And then this is the New York Open. So at the New York Open, NASDAQ's becoming more bullish. And FTSE is becoming more bearish. Gold is becoming more bullish. Okay, it spotted it twice. Okay, that's all right. It just spotted it twice. So a little more bullishness in gold. And then pound Kiwi becoming bearish. Well, that was one of the pairs we were looking to be bearish on, based on QuantBox. But the thing is, instead of going through the process that I did to get to the conclusion that like maybe you should be selling pound, QuantBox is doing this automatically and sending you an alert. Okay, this was again pre-New York. This was pre-London. So, right? And once again, it was saying the same thing. In this case, Aussie yen is more bearish. FTSE is more bearish. Gold is more bullish. NASDAQ is more bullish. And there it is, right? The bearishness in pound Kiwi. And then you were updated again pre-New York, bearish pound Kiwi. It's kind of nice, right? Like, so then what do? You pull up your pound Kiwi and you look and see if there's any opportunities to be a bear. It might not be something that you trade, but it's just doing fundamental analysis for you. It's not thinking anything else. Okay? And so now today you might say, are you going to be in the business of selling a top? Because you can say, well, fundamentally, this pair has gotten quite bearish. And so maybe today you spot a pattern that sets something like this up. Well, we don't know, that's fundamentals. But now if traders noticed a top and a lower high, it might help you have congruency amongst the technical and fundamental analysis. Right? Cool. Then we go to the other email that I got an hour later. This is it. This is the morning report from TRADARS. It's pretty, right? Yeah, it is. Apple's in play. Amazon's in play. Tesla's in play. Meta's in play. Nvidia's in play. Aussie dollar in play. Kiwi dollar in play. Bitcoin in play. 60, right? Look at this. Taking it up on the breach. Triangle has broken through the resistance line from last week, or I guess that was yesterday. Possible bullish price movement forecast for the next 3 days towards 70,000. And it's drawn out. There's the support. There's the break. We're on our way to 70. It's nice, right? On the 4-hour chart, probably last 3 days, probably get to 70 plus. Remember, that doesn't have to be, okay? That doesn't have to be the target. It could, right? You should be looking at this as was, bearish and now bullish. I mean, this is the first move. It can go from 70 to 100,000. But, right, you have the triangle, you have the support, you have the distance from here to here, and then it just projects up. But it could be a lot more up. Okay, that's just the technicals. Ethereum in play, right? FTSE coming down. Well, once again, Quant Box had this same analysis for completely different reasons. Completely different reasons. One of them completely fundamental, and this one completely technical. But what if you have congruency between technical and fundamental analysis? Well, maybe you'll have more consistency in your trade plans. TRADARS has oil coming up on a 15-minute chart, breaching resistance on our way to $82. So maybe that's a play you got today. Okay. Quant Box and TRADARS are looking at gold going up. Again, completely different analysis. Nothing even similar between the two sets of analysis. Not even the same data sets. This is pattern recognition. TRADARS is looking at inflation and employment and GDP. Like completely different analysis. So that could be interesting, huh? On our way to, what? It says 2170. Maybe on our way to 22. Inverse head and shoulders identified at on the 25th, so at 5 a.m. this morning. The pattern is still in the process of forming. Possible bullish price movement towards the resistance at 2176.4360. Right. All right. So how we say 2175, huh? Within the next 8 hours. And that was, you were alerted to that 3.5 hours ago. So maybe some of these things you look at, right? So you're like, okay, well, I don't know anything about that. So let's start on, you pull up your gold and you're like, let's take a look at the gold. You're like, all right, so maybe this is going to go up. And so you start your analysis. Excuse me. Okay. So it's saying on a 30-minute chart, 3 hours ago, 1, 2, 3. So 3 hours ago we were here. Okay, 3 hours ago we were here. And TRADARS said, excuse me, 2175. Oh, well, we're there now. Ha ha. There you go. Done. Okay. In fact, the signal came out here on the breach. I can see that now, right? On the breach. So it said one of these things. And it's done. Not that the trade is done, but that first version of the trade setup, it's also got this marked. So now maybe later today it could continue, but it got you in the first wave. And there it is. Oops, let me back this out a little bit. Okay, it's talking about there. So it was connecting this to this to this, and there's the little entry. Oops, delete. It's all right. You see it up, down, gone. Okay. So there's the bottom, up, down, gone. And now first wave target. But, I'm a trader too. I can outthink a machine. So the next probability is maybe something like that. Now, why would I think that way? Well, think about the monster in my mind on a completely different time frame for probably completely different reasons, because many of mine are fundamentally based, not necessarily just technical. I already have the higher high, higher low planned out. Okay, so we already did this a week ago. Forget it, 3 hours ago. Last week we had this coming down, and we're supposed to be in the process of looking for bullishness. Okay, down, up, down, up, down, 100% up, 618 down. Yeah, now that should be in play. Okay, if you were waiting the last 2 days for bullishness, that just kicked in. So I would be taking it up further. TRADARS just told you it's happening. And so far that just paid off. Like that whole trade just worked. You're probably taking profit if you're just doing that trade. I'd probably jam my stop and let it run. Cool, right? Like nuts. In fact, oh, that's probably right back. And then my WTI, let's see what it said about WTI, because I remember that being up there. It looks like it's saying if it breaches above this price level, it'll go up for a day trade. 81.67, where are we? 81.67, we're back down there, so we never got above it. Okay, we were close. Looks like we're trapped in that range. And it's saying, well, maybe, okay, maybe it'll develop to the upside. Remember, it's emerging. It hasn't happened yet. Resistance, okay, at 81.67. So that's exactly where this is. So now, if I was going to trade this as a technician, okay, TRADARS is spotting a pattern. Well, how do you respond to the pattern is what technical analysis is also, right? So we know this is a range. So what I have taught you over the years is that you set up a trap and break strategy to the range. And we're leaning to some bullishness. So it's kind of like if it breaks to the upside, you catch the pullback and you're long and gone. Okay, now it might break to the downside and you trade it that way. That's how you do a trap and break. You acknowledge the range and you trade the breakout. You can filter it with buy the bottom of the range as support or buy the top of the range as support. And you can say because of your fundamental bias, you're not interested in this at all. So now you whittle it down to these opportunities. Let me do this in a different color, a little orange, I guess. As a bull, you might be an interest in the opportunity here around 81 where you buy, or up here at 81.50, but after the break, and you buy. Because as a bull, you only buy support. So TRADARS and Quant box, there are assistants that work for you. So now you can trade like a professional trader that has a staff, a quantitative analyst and a technical analyst working for you. You still have to make the big decisions. But your research is just gone up 10x. Okay? And I hope you see the value in that. Okay? For a couple $100 a month, you can trade like a $1 billion hedge fund that spends millions. You can get something similar for a couple $100. Pff, holy smokes. Yeah. Cool. Those emails are helpful, aren't they? So QuantBox this morning said, hey, keep your eye on NASI today. Okay, well, let's take a look at NASI. Okay. So I'm watching like the daily candles and stuff, right? On these things. And looking at NASDAQ, I'm concerned for two reasons. Okay. One is that we had this support and we dropped below. So that freaks me out. So I'm going to put an exclamation point here. Okay. Wow. That freaks me out. And that sets up the double top. And if it falls here, I figure it's going to drop 15%. Whoa! How did you come up with that number? I just made it up. But it's significant. Not catastrophic, but significant. So I got to keep an eye on that. Okay. So it's not bearish, but it could be. And so what I'm interested in right now is a variation of this, or I mentally score flip. I change from a bull to a bear. But maybe we catch, right? Maybe I can catch that 21. Maybe I can catch the central pivot buy zone. So like next month, that's our buy zone. You can see it goes back for a while. So it's not the end of the world, but it might be. So I have to be prepared. So that's how I filter that. And of course, at any time I could SQQ it, right? Anyone trade the SQs? Excuse me. So that's selling the NASDAQ triple leveraged. That's one way of doing it. Okay. Dow is catching the biggest bid out of these, as we saw in the commitment to traders report, but yet is coming down. So what you're deciding now, and I asked you to decide on this last week, is, will you buy it down here for an up? Is that your plan? You must ask yourself these questions. Otherwise, you're just reacting. You need to be planning. Okay, you need to be planning. What do you think? All right. Remember, money went into that last week. And then here's our S&P. Let's go out to a 4-hour or a daily. And yeah, important, right? Important. I have it pointing down. And if you were a bear selling the M3, you'd be targeting 5,100. Whoa. Okay. And that's lower than the 21. I think if there's some bullishness in the market left, I think what would happen is it would drop to the support pivot, which is the 21, and then heads up to the R1 for an inside S1 R1. We call that an inside week. Okay. And that gets us to the monthly target. Cool, right? All right, let's take a look at some dollar pairs. You live, you learn. You love, you learn. You cry, you learn. Ay, 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 ay. Okay, what do you think? Double top? What are you going to do? What are you going to do? What are you going to do? Double top? Huh? Let's see. You had an opportunity to sell a double top, and soon you'll have an opportunity to buy at support. We're right in the middle. It's kind of late, but what is it that you think this is going to do in the next 3 days and 3 weeks? Okay? If you don't know, that's your weakness. You can't form an opinion. It's going to be hard to be good at this business without an opinion. Okay? Okay. I spoke about the USD yen today in the Quant box video. Does anybody want to see the Quant box video for today? All you have to do is subscribe to the YouTube channel for free. 48 minutes ago. Look at that. I went weeks without updating. Well, yeah, maybe you should become a member. What do you think? Huh? Words. There are words.
It's a pullback. So what I've taught you in the past, and I hope you're picking up these things. Everything was 50% off. Everything. Okay, so the question then is, when will the Fed cut? The Fed is barely restricted in bulls and a significant increase in bears. What they call bloodbath. Okay? So, do you wake up in the morning and sell the Aussie? That's what this information's for. You're like, man, the last 2 years I made a ton of money on NASDAQ. As well as these financials. The technical trend continues. Okay, because we measure the slope of the mean average, you can do a linear projection with standard deviation, and you get as high as 84.50 in a very bullish move, 83, or there's going to be a drop to 79 and then a recovery back to 81. All of those plausible based on standard deviation.
I mean, dude, seriously. Quant box is good. So that's the YouTube channel. That's free. That's live right now. Yeah. Is this us right now? That's cool. What do you guys think? Yeah. Cool, right? It's nice to have the data and not just guessing. At least that's how I feel. Take a look at a couple other pairs. We could look at, I suppose everybody likes euro dollar, right? The interesting thing, using pivot theory is this was the buy zone for the month of March. Yeah. And this was the target zone for the month of March. So really we were done March, by the 10th. The month was done. Then you get all this noise, okay, double top and a drop. And there's a little bit of a trade there, but then it flips the other way, and then that flips the other way, and now we're right back to where we were. So what happened in the last 30 days with euro dollar? Nothing. Okay, nothing. Okay, now on a bigger time frame, maybe we can get a move out of it. Now, there's so much going on here, it's hard to see, but you can do a simplified version of this, and I guess we can do that. Why don't we do a simplified version? Okay, simplified version. So you make a decision, and at the beginning of the year, your trade plan was take this down to 103. Maybe parity. Okay, how do you guys feel about that? Is that where we're going? I would say if the U.S. stock market's going to have a 10% decline, I'd say, oh, for sure. You'll need the stock market to decline for that. Okay. Okay, this is where bears sell. This is where bulls buy. This is where they both agree. We are in a battle. If you think the Fed is going to cut less than 3 times, maybe even no times, that's what's going to happen. If you believe the Fed's going to cut in June, and then again in September, and then again in December, you're going to do this. Let's say it comes down a little more, and then up, and then down, and then work its way up. You would have to have the stock market to be up as well. What do you believe? Where do you stand? Okay. So if you're going to be a bear, let's say, start your planning. Okay, so if you're going to be a bear, here's your plans for the week. Or done. I just planned out your entire week for the most traded, most liquid currency pair on the planet by far. Do you agree or disagree? You won't offend me. I'm interested that you actually think about it. What do you guys think? Agree, disagree? You're worried about saying it to my face? Okay, let's remedy that. Okay. Let's see. Let me do a poll. Oops, where'd it go? Okay, we'll do a poll. Euro, dollar, down on daily chart. Agree, disagree. I wimp out and have no opinion. All right, let's go. Okay. So it's just down from the previous top. I don't care which top. Your opinion is that this is going to be lasting. Okay. Completely anonymous. Oh, it didn't pop the poll. I thought I clicked it. Here we go. There we go. It took a while. All right, let's do it. And you're like, well, we can tighten this up if you wanted. We can go custom. We can add bias pivots and say, give me a bearish trade plans to the right on, and yep. Give me some bearish trade plans, and that's what it looks like. You can adjust this. Go to the indicators, bias pivots, bearish. Nah, give us some swing trades. Okay, so the bearish swing trade looks like this. And that was my plan A. Swing trade, what do you think? Half of you haven't voted? How come? Why would half not vote? Is it insulting? Is it obvious? You don't know? Very interesting. Okay, for those that don't know, you're making decisions here, and let me highlight some of the decisions. Okay. That's a bottom and that's a top. So what's next? Higher high or higher low? Well, that's a great way to make that decision is fundamental bias. But if you lack that, you can also do price action. Okay, so there's a bottom there. Are you a bull? No. But when you breach this level here, it's standard operating procedure as a technician to buy here. It's right out of the training course. Okay. Then we go to make another higher high, right? So we make another higher high, and you're supposed to grab sort of this zone here. And this is supposed to be the next buy zone. And it was. But now there's a failure. Well, what do you think is happening there? The same equal but opposite reaction. That old support becomes resistance. So bears are currently in control. But now we're in fib wars. Okay? And some people are going to want to buy dips if they're a bull. And meanwhile, bears are already selling the rips. Oops. So, once again, it helps to have a fundamental bias. Okay. There is no doubt that technically you could sell that. And if you lost money, it would be a good trade. Concerns about this setup is that we're at the neutral zone. We're at the 200 EMA. There's no direction, technically. If you were a bull, let's approach it that way. If you were a bull, do you like buying lower lows? Let's call this a lower low relative to that low, relative to that low. Do you buy lower lows? And if so, under what circumstance? No, I don't buy lower lows under any circumstance. Okay? So what do you need before this becomes a bull? You would need to test that, and that pattern needs to fail. So you could buy a double bottom. That's okay. And then after that, a higher high, higher low. Can you buy that on this role reversal? Yes. So that has not happened yet, has it? So who's in control? Bears. So hopefully that helps in the making, right, in your decision-making process. But I still am stunned that half of you wouldn't answer that. I don't understand the other half, really. Well, maybe I haven't earned your respect or something. That's fine. That's fair. Okay? But I think answering the questions and being engaged with the conversation will help you learn how to trade and go through that decision-making process. Yeah. And you're like, but Wayne, how do I trade it like when? Really? That's the problem? Look, if you don't know how to become a bull or a bear, that's your problem. Don't worry about anything else. And then the second thing is if you're a bear and I just did this for you and you're like, oops. And then you say to me, but Wayne, I still don't know, like, how do I pull the trigger? Really? All right. Okay, let's explore that briefly. Pulling the trigger is the easiest part of trading. All right, somewhere around here. It's a roll reversal. It's a daily pivot. It's a future daily 21. So let's kind of create a zone. Okay? And you're like, oh, well, I don't know where to draw the lines. Okay, let's use a tool that will draw the lines for you. There, now you have lines. And then you're like, but I still don't know when to pull the trigger. Okay, I'll tell you what. Drop into a small time frame. When it goes up near those lines you just drew, and then it turns bearish, pull the trigger. To me, that's the easiest part. Okay? It's difficult if you're worried about losing money. Okay? If you lack confidence, maybe you don't have enough trading experience, or maybe you're not doing enough fundamental analysis, or maybe you don't know how the market works. If you're in that situation, I highly recommend you stop trading because it's never going to work. Doesn't matter. You can change your indicators, you can change your time frames, you can change your guru. It ain't going to work. So you got to focus on what matters, and that's developing confidence based on reality, real skills, real work ethic, real training. Okay? And you get to that, and then you improve your decision-making process first and foremost, and that's where the confidence is going to come from. And then you carry out really basic tactical processes. Like you'll learn some pivot points because they're helpful future projections, and a great way to identify some levels of support and resistance. And then you learn price action, which is another way to identify levels of support and resistance. And that's all you need. Now you can add on some moving averages, sure. You can add in some oscillators, sure, whatever. And you can pick which ones you want. I don't care if it's MACD, RSI, CCI, stochastics. Don't care. It doesn't matter. They're helpful all in the same way. Different math, same outcome. Great. If you want to use one, I'm totally fine with it. You have my permission. Do you like Elliott Wave? Then use it. It doesn't matter. It won't change anything. It's just a process. It's a great process. I don't use it, but I get to the same conclusion. So use that. What about Fibonacci? Yeah. What about patterns? Sure. But if you don't understand like support and resistance, it ain't going to happen. And if you don't have confidence in what you're doing because you have a weak decision-making process, you're never going to follow the rules of engagement anyways because you don't have the confidence. You're afraid. So you got to focus on that first. And therefore, you don't have, if you have confidence in your true abilities, making a decision, setting up a tactical plan to enter in that decision. What's the decision? That's your bias. Are you a buyer or a seller? I would guess of the 95% of traders that lose money, I'd guess 75% of them don't even know if they're a bull or a bear. They just react to some nonsense on their chart. Well, guess what? That's probably a contribution to their losses. But once you have a bias, now you should be really good at your tactics. Okay, tactics. Is this bearish? No. Are you a bear? Yes. Is this bearish? No. What do we do? Hold. Wait. Sit on your hands. Sit tight, son. And so now you might spend the rest of your day waiting for this 5-minute chart to turn bearish. What's the worst outcome if you're wrong? You sit here for 3-4 hours and it doesn't turn bearish. Better than losing money. Plus, you're developing patience and discipline that will work to your benefit on days where your bias, it's not wrong or right. It's the days your bias has congruency with the market, you will kick some mighty ass. Everybody else just reacts to your moves, but you're the one in control. You're the boss. That's how you do it. That was real. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being part of the community. I wish you the best of luck. Day traders, I will see you at 4 p.m. at the market close to plan tomorrow. Again, thank you for being part of Forex.Today. If you use my Quant box tools or my traders tools, I highly, highly recommend that you seriously consider moving over to an ECN like Traders Way, where they want you to succeed. Think about it. It makes logical sense. Peace on earth. May the pips be with you. May your profits be above average. Go kick some ass, huh? Cheers.